Hey everyone, I'm Jenna and welcome to CPUC Rules 15 and 16, Part 1, Residential Homes. In this session, Charlie will walk you through the key topics for residential projects under these rules. He'll start with an overview of both rules together, then help you decide whether your project should be overhead or underground. Next, you'll explore design and installation options, review allowances and refunds, and learn how they affect your project. Finally, Charlie will wrap up with real residential construction examples to tie everything together. Let's get started.
Hi everyone, I'm Charlie. When new homes, commercial projects, or subdivisions are built across California, extending power safely and fairly is governed by California Public Utilities Commission Rules 15 and 16. These rules define who designs, pays for, and owns the facilities that connect customers to the grid, ensuring consistent standards across all of California's electric utilities. Think of these rules as the playbook for infrastructure expansion. They balance the interests of new customers, existing ratepayers, utilities, and future development. Understanding them is essential for anyone involved in California's built environment, from breaking ground on a single home to planning entire communities. Let's take a look at the two rules, side by side. Rule 15 governs extensions of main distribution lines from the existing utility system to the general area of a new development. Think of this as bringing power to your neighborhood. The main distribution system typically runs along streets or within the public right-of-way. It serves multiple customers or developments and includes transformers, switches, and primary cables. When extending the distribution system to your project, refunds may apply when future customers connect to it. In comparison, Rule 16 governs service extensions from the utility distribution line to the individual customer's service point or meter. It generally includes the portion that runs from the utility transformer to your meter. The Rule 16 extension only serves individual customers or buildings and includes service conductors and meter installation. Because Rule 16 applies to a single facility, no refunds are available for the service work. Both rules define cost sharing, allowances, and design responsibilities. They ensure fairness. Costs are shared based on who benefits: the applicant, future customers, or the system as a whole. Let's look at an underground electric distribution system. Underground systems are comprised of concrete vault structures, buried mostly underground with only the lids visible. They're connected together with a network of underground conduits. High-voltage cables are installed within the conduits and connected together within the vaults. Other equipment like pad-mounted transformers are connected to this network with additional conduits and cable. The transformers reduce the high voltage of the primary system to the lower service voltage required at your home. The low-voltage conductors that bring power from the transformer to your electric meter is called the service. Take a look at the home at the bottom of the image. The electric facilities that provide power to this home, beginning with the conduit and cable connected to vault number 3, the transformer and the service conduit, are all installed under the provisions of Rule 16. Since these facilities only provide power to a single customer. Similarly for the home at the top, since these electric facilities provide service to a single customer, they fall under Rule 16. Vault number 3 shown in the image provides power to exactly 2 customers, as well as the conduit and cable connecting it to vault number 2. Since these facilities provide power to more than one customer, they're installed under the provisions of Rule 15. The other structures and equipment shown are all dedicated to providing power to many customers, and as such, they also fall under Rule 15. According to both rules, underground line extensions are generally required in the state of California. In fact, underground distribution line extensions are required for all new residential subdivisions, residential developments, commercial and industrial developments and locations in proximity to the beautiful scenic areas California is known for. Overhead, line extensions are still permitted within areas meeting certain specific requirements. Check with your local utility representative to determine if your project meets the requirements for an overhead line extension. For the remainder of this video series, we will be focusing on the most common types of underground line extensions. An applicant is defined as a person or agency requesting the utility to supply electric service. As the applicant, one of the first steps to receive electric power is to have the engineered construction plans produced that will provide the detailed instructions for the installation of the new electric service. These plans will include scaled drawings of the work to be performed and a list of the associated materials, facilities, and structures that will be installed. Once these plans are complete and approved by the utility, a cost estimate can be created that will determine the applicant's allowances, cash advances due, or refund eligibility, if applicable. It is typically the utility who is responsible for the planning, designing, and engineering of its distribution facilities. However, in accordance with the applicant design option, the applicant has the choice to have these plans produced by an independent, qualified engineering contractor. In the case of applicant-designed projects requiring an advance, the applicant may receive a design credit from the utility for the cost of these plans. We'll cover this more in the examples. The construction and installation of electric facilities by the applicant that will be deeded to and used by the local utility for the distribution of electric power helps the utility expand their electric distribution system and generate revenue for many years to come. In recognition of this, the utility will assist the applicant with the cost of the construction and installation of the required facilities by granting an allowance. For permanent residential home projects, the allowance is a fixed value determined by the utility. The value of the residential allowance is periodically adjusted. Check with your utility representative for the current residential allowance. For the following examples, we'll assume the allowance to be $3,250. Allowances for non-residential projects, such as commercial or industrial developments, are based on the projected electric loads that will be utilized by the new facilities. These allowances are calculated on several factors, including projected loads, net revenue generated by the utility, and a cost of service factor. Check with your utility representative for assistance determining allowances for new commercial or industrial projects. In addition to allowances, the applicant may be eligible for refunds if the work required to install the new electric service includes additions to or extensions of the distribution system that serves multiple customers covered under Rule 15. If new customers are able to connect to the facilities installed by others for a period of up to 10 years, the applicant responsible for the installation of such facilities may receive a refund for all or a portion of their initial expenses. We'll cover this more in the examples. Once the construction plans are complete and with the utility's approval, the project will advance to the construction phase. It is typically the applicant's responsibility to complete all necessary trenching, backfilling, and other digging as required. In addition, the applicant will install the substructures, conduits, and protective structures, including the meter panel. When complete, the applicant will convey ownership of all structures and conduits, except the service conduits attached to the new home. Upon acceptance of ownership, the utility will install the necessary cables, switches, transformers, and other facilities, including the electric meter, to complete the necessary work and begin providing electric service. Let's take a look at an example. Applicant number 1 is building a new home and has requested a new electric service from the local utility. Once the engineering design is complete, it is determined the new service will require installation of a new vault, a transformer, approximately 300 feet of new primary conduit and cable, as well as 30 feet of service conduit and cable connected to the customer's meter panel. The point of connection to the distribution system will be at vault number 2. Because all the new service infrastructure is providing for a single service to the home and will not be used to service additional customers or facilities, the cost of the installation will fall under Rule 16. Once the construction plans have been completed by the applicant's engineering contractor and accepted by the utility can prepare and provide a cost estimate for the construction work necessary for the installation of the service. First, the cost estimate will provide the estimated value of the facilities installed by the applicant and deeded to the utility. In our example, $1,200. And second, It will show the estimate for the installed cost of the work performed by the utility, $6,800. The total estimated installed value of the work by both the applicant and utility, $8,000, is the amount payable to the utility prior to commencing its work. However, since this is a residential home project, the utility will grant to the applicant an allowance to help cover the cost of the construction. In this example, the allowance is a fixed value for permanent residential homes of $3,250. Also, the applicant's engineering design contractor charged $3,500 for the construction plans. The utility will credit the applicant with the estimated value of this work had the utility completed the design work themselves, a total of $2,200. In addition, the applicant hired a construction contractor that charged $5,250 to perform the construction work required by the applicant. Once this work is inspected and accepted by the utility, a credit will be provided to the applicant for the estimated installed value of the substructures. In this example, $1,200. The final total of $1,350 represents the estimated value of the project in excess of the allowance and credits. This amount plus an income tax component of contribution, or ITCC, estimated at 27% is the total cash required to be paid prior to the utility commencing any work. In this example, a cash payment of $1,714.50 would be paid by the applicant to the utility. Once this payment is received, the utility can perform their portion of the work, including the meter installation, and begin providing electric service to the applicant's new home. Also note, the design and installation credits are known as Contributions in Aid of Construction, or CIAC. These values may be taxable and subject to the 27% income tax shown. Check with your local utility regarding the ITCC tax rate and applicability to CIAC. Let's take a look at this again. The applicant's total expense for the new service includes the cost of the construction performed by the utility, $6,800. The utility granted a construction allowance of $3,250. The applicant's construction cost, $5,250, minus the value of the substructures for which the utility took ownership. In this case, $1,200. The applicant hired an engineering firm to produce the construction plans at a cost of $3,500. The utility credited back the value of the construction plans had the utility performed the design themselves. In this case, $2,200. Lastly, the cash advanced paid to the utility, $1,714.50. The applicant's total out-of-pocket cost for the project, $10,614.50. The utility's expenses include the allowance granted for the residential service, $3,250. The credit for the value of the substructures for which they took ownership, $1,200, and the engineering credit of $2,200. They also received a cash payment from the applicant of $1,714.50. Therefore, the utility's total investment in the project was $4,935.50. This is an example of the cost sharing for which Rules 15 and 16 were created. Please note, the values shown in this and the following examples are only hypothetical and should not be used to determine actual construction costs for any similar project. Let's look at another example. You'll recall previously all the service facilities installed for applicant number 1's home were installed under Rule 16. What would change if applicant number 1 became aware of a future home that may be constructed on the empty lot next to his own? What if the applicant or perhaps the utility requested a conduit stub to be added to applicant number 1's project that could be used to provide a service to the future home on the adjacent lot? Note that a conduit stub is simply a run of conduit that is capped at the end, buried underground, and available for use should the need arise sometime in the future. In this case, the facilities installed by applicant number 1, including the conduit and cable installed between vault number 2 and number 3, as well as vault number 3, would fall under the provisions of Rule 15. Since these facilities can now be used to serve more than one customer, they would now be considered an extension of the distribution system. Some of the costs of this work, paid for by applicant number 1, would become refundable if applicant number 2 built the home shown and added another service to the distribution system. If you recall in the previous example, applicant number 1's project cost $8,000. After the utility allowance and credits were applied, the applicant paid a cash advance to the utility for the portion of the line extension that exceeded the allowance and credits. In this case, $1,714.50. Under Rule 15, this amount can become refundable. Some or all of the amount may be refunded should applicant number 2 build the future home, including a new electric service which connects to vault number 3. Let's assume that happened. Within the following year and under the provision of Rule 16, applicant number 2 constructed a new home and connected a new service to the electric distribution system. Since most of the electric infrastructure utilized was already installed, applicant number 2's expenses were substantially less. After the design and engineering was completed, a total payable to utility of $3,700 was determined. And once the standard residential allowance of $3,250 was applied, along with an applicant design credit of $1,000 and an installation credit of $600, applicant number 2's project resulted in a total excess cost of $1,150. Under the provisions of Rule 16, applicant number 2 does not have to pay a cash advance to the utility, since the total amount payable to the utility was less than the applied allowance and credits. The excess amount of $1,150 also does not get refunded to applicant number 2. Under Rule 15, however, this excess amount gets refunded to applicant number 1. This is another example of the cost sharing for which Rules 15 and 16 were created. We'll also note here that Rule 15 includes 2 payment options, the first being the refundable option we've just covered, and the second, referred to as the 50% non-refundable option. You'll recall applicant number 1 was required to make a cash advance of $1,714.50 to the utility and was also eligible for refunds. The 50% option allows applicant number 1 the choice to reduce the cash advance by 1/2, but also eliminating eligibility for future refunds. The choice of payment options may depend on many factors, including out-of-pocket expenses and the probability of future customers connecting to the system. Check with your utility representative to determine which payment option is best for you.
Thanks, Charlie. This wraps up CPUC Rules 15 and 16, Part 1, Residential Homes. In this video, we covered underground electric distribution and explained how Rule 16 applies to facilities serving a single customer, while Rule 15 applies to facilities serving multiple customers. We also talked about applicant design options, the choice to have engineering plans completed by an approved designer or by the utility, along with allowances and refunds that help offset construction costs and determine refund eligibility under Rule 15. Finally, we discussed applicant installation, the work typically completed by the applicant and the facilities deeded to the utility. We hope you found this information helpful. Join us for Part 2 of our CPUC Rules 15 and 16 training series. Thanks for watching.